30% of your credit score is basically your balance to limit ratio on your credit cards. And so 30% of your credit score, almost a third, you can control 100% by the way you treat your plastic in your wallet or your purse, okay? Now, I'll tell you this, as soon as you cross over 50% of usage, so let's say that you got $1,000 credit card in your wallet, you spend $500, the credit scoring algorithm goes, oh my gosh, they're overutilizing credit. They must not have enough cash. Red flag goes up, okay? These are just indicators because you have to remember your credit score isn't some like, you start with an A and we love, all students the same type thing. It's a risk-based model so that banks don't give you money if they're going to lose it, right? And so they're trying to weed you out. They're trying to figure out who you are. And so if you go over 50%, it doesn't mean you're a bad person. I do it almost every month on a credit card that I use for business to rack up airline miles, right? But I'm using it strategically and I don't need to do financing in the next 30 days. So my point is, it doesn't mean you're a bad person, but what it does is it sends out a red flag that says this person is statistically more likely right now to default on any loan because they're overutilizing this credit card, okay? So 50% and over, red flags, just try not to do it. 30% and below is considered good. If you want to max out your credit though, you're going to hover right between 5 and 10%, and you're going to use your credit card strategically. In 2022, it's super simple to do this. You set up an auto payment and then you set up an auto payment, meaning say Netflix, okay? I set that up on my Citi card to auto pay off of that card. Then I set my Citi card up to auto pay out of my bank account. Now that cycle just goes on and on and on every month. I don't have to do anything. And my credit is every single month going up and up and up because I'm making good payments, right? But I'm not actually needing to be responsible and send them in like you used to have to. So you want to keep it between 5 and 10%. And some people will say, no, pay it all the way down to zero so that you don't have to pay any interest. And it really just depends on what you're gearing up for. If you're like, I am not getting a mortgage anytime soon, and if I did need to, I would have time. I would have 2 months to get things straightened out, right? But if you are in that position where you're like, I got to keep my credit looking good at all times, you hover between 5 and 10% because if every time the credit cycle reports back to the bureaus, you're at $0, you're not going to get credit sometimes for that good usage that you've been doing. So I call it the great credit tax. You're going to end up paying like a couple bucks in interest if you keep 5% on your credit card, but you're going to have sky high credit scores. So I would do that.